Good morning, students. Welcome you all on the revisionary classes organized by Board of Studies of ICAI. Students, my name is Alok Garg and I am the today's faculty for Ind AS 1. So students, today we are going to revise Ind AS 1 and that is why Ind AS 1 will be completed in today's class itself. I'll start with few concepts, right? So I'll just set the context and then I come to the questions which is from ICAI Board of Studies material. And with the help of the concept, I will also revise the concepts for Ind AS 1. So students, this Ind AS 1, the title is Presentation of Financial Statement. So this standard is applicable to the financial statements, right? So when I talk about financial statements, it includes my balance sheet, it includes my statement of profit and loss, it includes statement of changes in equity, it includes statement of cash flows and notes to accounts along with the explanatory information. Friends, the balance sheet shows you the statement of financial position, right? So Ind AS 1 prescribes what are the minimum line item on the face of the balance sheet. What should be the minimum line item? Ind AS 1 also prescribe the classification in the balance sheet of different line items as per current and non-current, right? Your entire balance sheet is divided into two aspects. One is current, one is non-current, okay? So we are going to discuss what is current, what is non-current along with the questions which is in the Board of Studies material, right? Then we'll discuss statement of profit and loss. In statement of profit and loss, the Ind AS 1 prescribes what should be the minimum line item on the face of the statement of profit and loss, right? Then the statement of profit and loss, what happens when there is a prior period errors, right? Whether it has to be separately presented or the requirement of third balance sheet along with multiple reconciliations are there. Then what is the concept of extraordinary item and exceptional item? While in Ind AS, there is no concept of extraordinary item. There is only a concept of exceptional item. Okay. So we are going to discuss that part as well. Statement of changes in equity. Statement of changes in equity is a statement which prescribes the shareholder movements, right? Changes in share capital, changes in reserves and surplus. Okay. Then we have a statement of cash flows. In the next class, we will discuss, we will revise statement of cash flows in Ind AS 7. Okay. Then there is a notes to accounts. So Ind AS 1 also prescribes that what is your notes to accounts. Okay. What should be the sequence of the notes to accounts? And notes to accounts are the qualitative and quantitative disclosures, which is supporting your balance sheet, which is supporting your P&L, which is supporting the other component, as well as it also includes the relevant aspect. Okay. It also includes the relevant, it also includes the relevant disclosure, which is required as per the other standard. For example, related party disclosure, contingent liability, etc., etc. Friends, if I talk about this component, balance sheet, statement of profit and loss, statement of changes in equity, notes to accounts, right? Schedule 3, Division 2 to Schedule 3 also covers the guidance relating to these aspects. And Ind AS 1 also covers the guidance relating to these aspects. So we are confined to our discussion to Ind AS 1, right? So today we are going to discuss Ind AS 1, presentation of financial statement. Okay. Yeah. So students, let's start with the questions and then I'll come to the concept. Okay. I hope my Excel file is visible to everyone. Is it the Word file is visible to everyone? Yes. Question number 1. As I told you in the balance sheet, this Ind AS 1 prescribes what is current and what is non-current. Okay. So the first question is, an entity has placed certain deposits with various parties. How the following deposits should be classified, current or non-current? Question number A, electricity deposit. The company has deposited electricity deposit into the DISCOM, which is electricity board, right? And whether this electricity deposit should be classified as a current asset or non-current asset in the books of the company. Any answer? Any answer, friends? I can see few students who have joined on the Zoom platform, and few students are there on the, they have joined offline. So what should be the answer of this electricity deposit? Whether it should be current, it should be non-current. Student, you can answer on the chat box also. You just need to answer, is it current, is it non-current? What's your view?
Non-current.
Non-current. Okay. So why it should be non-current? This electricity deposit, whenever you surrender the electricity connection, right? The department will refund your electricity deposit within a week or so, right? There is only a processing time, or let's say maximum a month. So these electricity deposit are generally recoverable on the demand. So whenever you surrender, you will get the refund. Then why it should be non-current? Why it should be non-current, guys? So let me take you to the definition of current asset, right? And then we will discuss why it is non-current. While the answer is correct, it should be non-current, but why it should be a non-current asset? So I'm taking you to the concept of current and non-current, and then we will discuss why it is non-current. Okay. Yes. So what is the definition of non-current asset? Very simple definition. An asset which is not a current asset is a non-current asset, right? An asset which is not a current asset is a non-current asset. But what is the definition of a current asset, right? First of all, let's understand this definition. A current asset is an asset where the entity expects to realize the asset, where the entity expects to realize the asset or intends to sell or consume it in its normal operating cycle. Okay. Where the entity expects to realize the asset or intend to sell or consume it in its normal operating cycle or within a period of 12 months after the reporting period. So when your asset will be classified as current assets, when you as an entity expects, okay, I'm going to receive this money within the operating cycle, or I'm going to receive this money within a period of 12 months. In this current case, the electricity deposit, right? So electricity deposit, electricity is like one of the essential requirement for running a business. Okay. So if the company is running on a going concern basis, the company is not expected to surrender its electricity connection, right? Company is not expected to surrender its electricity connection, right? Company does not expect to receive this electricity deposit back, right? After 12 months or in the near future. That is why if you see the intent of the company is not to recover, not to refund, not to get this money from the electricity department in the foreseeable future or within a period of 12 months, and hence it should be classified as non-current asset. Okay. It should be classified as a non-current asset. Let's see what is the answer which is written in the Board of Studies material. So I hope this is visible. Electricity deposit. At all points of time, the deposit is recoverable on demand, as I explained you, when the connection is not required. Correct? However, practically, such electricity connection is required as long as the entity exists. Hence, from a commercial reality perspective, an entity does not expect to realize the asset within 12 months from the end of the reporting period. Hence, electricity deposit should be classified as a non-current asset. Okay. Friends, whenever you look at the asset, you need to see the expectation of the realizability as well. But when you look at the liability, in liability, expectation doesn't work. In liability, the contractual things work, right? We'll come to that. The second question, tender deposit or earnest money deposit. What is this tender deposit or earnest money deposit? Tender deposit is like an entity wants to participate in some tender, right? Like Government of India has invited the government of India has invited some, some safety equipment, some security equipments at their border, okay, at our border. So what happened? Many companies participated in that tender. The companies who are manufacturing this safety and security equipment, they have participated in this tender, in this bid. And the pre-requirement is every entity has to deposit 20 lakh rupees as a security deposit, which is tender deposit. Now what happened? So they will come out with a tender after a certain period of time. If the company won the tender, okay, then that money will be adjusted. If the company doesn't won the tender, doesn't won the bid, then the money will be refunded. Okay. Now the question is, what is the nature of these tender deposit or earnest money deposit in the books of the accounts, right? Whether it should be classified as current or it should be classified as non-current. What is your answer? Resham, what is your answer? Whether it should be classified as current or non-current. Shweta, Hariom, Manikand, Saminath, what is your answer? Whether it should be current or non-current.
It is current if it is refundable within a period of 12 months. If it is non-current in case we won the tender and if they refund or like release or adjust after a year.
Yes. So basically, the answer of every question is not an objective type question. Okay. At times you have to explain, you have to support your answer with the justification. You are the CA final students. Okay. CA final means you have to have an expertise in the accounting standard, which is Indian accounting standard, Ind AS. So what happened when you enter into the corporate life, or even if you are pursuing your articleship and when you're auditing any company, so there are possible scenarios. Okay. So whenever you talk to the management or whenever you speak to your senior, so when they are asking what should be the right answer, so you have to lay your answer with the supporting with the different scenarios. In the question is only asking about tender deposit or earnest money deposit. Okay. The question has not given you any dates, anything, any other information. So what should be your answer? As you have rightly mentioned, if the tender deposit or earnest money deposit is expected to be realized within 12 months from the reporting period, expected to be realized or adjusted within 12 months from the reporting period, in that case, it has to be classified as current asset. Otherwise, it has to be classified as non-current asset. Let's understand with the help of an example. Let's say these companies which are participated in the Government of India security equipment bid, so they have deposited this earnest money or deposit money on 28th February 2025. Okay. And the outcome of this bid is going to happen after 1 year, 3 months. 15 months lock-in period is there. 15 months lock-in period is there. Why 15 months of lock-in period? There could be the commercial requirement of the Government of India. For example, whomsoever is participating in the bid, they want to see the conduct of those companies for the next 15 months. Okay. So they have deposited on 28th February 2025. The bid is going to open after 15 months. So tell me, what is the nature of this bid on 31st March 2025? What is the nature of this deposit? On 31st March 2025? On 31st March 2025, what is the remaining period by which either the money has to be refunded or money has to be adjusted? 1 year, 2 months. Right? On 31st March 25, the bid is going to open after 1 year, 2 months. So what should be the nature of this deposit? It should be non-current asset, right? To continue with this example, let's say the bid is not going to open after 1 year, 3 months. the bid is going to open after 10 months. Okay. So 28th February 2025, you have paid a money. Now the bid is going to open after 10 months. Means on 31st March 2025, the remaining period is 9 months. Okay. So in that case, what happened? In that case, whether it should be current or non-current. It should be current asset because the money is going to be realized within 12 months. Okay, it should be current asset. Shilpa ma'am? Yeah, so money is going to be realized within 12 months. Is that clear? Whether the standard deposit part is clear to everyone? So guys, you can also, participate. You can also give your answer through chat box. Even in the earlier classes, students used to use the chat box for answering their question, right? Yes. So let's see what is the answer which is given in the Board of Studies material. Generally, tender deposit or EMD, earnest money deposit, are paid for participation in various bids. They normally become recoverable if the entity does not win the bid. Bid dates are known at the time of tendering the deposit. Like I told you, 15 months and 10 months example I have taken. But until the date of the actual bid, one is not in a position to know if the entity is winning the bid or otherwise. Accordingly, depending on the terms of the deposit, if entity expects to realize the deposit within a period of 12 months, it should be classified as current, otherwise non-current. Okay. Third question. GST deposit paid under dispute or GST payment under dispute. The company has made a GST deposit or the company has made a GST payment under dispute. For example, the GST authority has initiated a demand against the company. Okay. And the requirement was the company has to pay for filing an appeal. The company has to pay at least 20% of the demand amount. So the company has deposited this 20% against dispute, under dispute, right? Paid under protest. So whether this deposit will be classified as current or it has to be classified as non-current. Friends, whether this GST deposit has to be classified as current or non-current. What is your answer? The GST deposit has to be classified as current or non-current. Are you not able to write on the chat box? The best way to learn anything is to participate. And the participation can be verbal, the participation can be through writing also. Shweta is saying if dispute is resolved within 12 months, then it is current, otherwise non-current. If dispute is resolved within 12 months, are you talking about dispute is resolved? How come you know that dispute will be resolved within 12 months? If you expect, right, the entity expects that the dispute is going to be resolved within 12 months. It is expectation. Okay. So when you see the word is expect. The company expects. And in the real world, how this company expect? So as an auditor, when you have to check whether the intention or expectation of the company is right or wrong, you have to ask some questions. You have to check some facts and circumstances. You have to check some evidences. For example, the company is in the advanced stage of litigation. Okay. The company has already started. The company has a strong background. And the company, by the past trend, the company is also expecting that this case is going to be settled within 12 months. Okay. Either the company has to pay the entire money or the company will get the refund of that amount. Okay. And at times whenever the litigation started, so these kind of litigation have some time bar also. Okay. So there are some timeline through by which this litigation has to be settled. So the company has to see that what are the timeline by which the company is expecting this litigation will be resolved. If it is resolved within 12 months, the expectation is it will be resolved within 12 months, then it has to be current, otherwise non-current. You're right, Sweta. Okay. So let's see the answer which is there in the Board of Studies material. GST deposit. Classification of GST deposit paid to the government authorities in the event of any legal dispute, which is under protest, would depend on the facts of the case and the expectation of the entity to realize the same within a period of 12 months. Would depend on what? Would depend on the fact of the case and expectation of the entity to realize the same within a period of 12 months. Okay. In the case, the entity expects these to be realized within 12 months, it should be classified as current. Otherwise, it has to be classified as non-current. Okay. So friends, this GST deposit, tender deposit, electricity deposit. So we have solved these questions. And in all these three questions, if you have seen that what is the essence of these three questions, the essence was whether the entity expect to realize the asset within a period of 12 months or not. If the entity expects to realize the asset within a period of 12 months, then it has to be classified as current. Otherwise, it has to be classified as non-current. But within a period of 12 months, this period has to be seen from which date? Which date? Because in the examination, you have multiple dates. For example, the example which I have taken for tender deposit, I told you that the tender deposit was paid on 28th February, right? And the bid is going to open after 15 months, right? So I have given you these two aspects and I have asked what is the classification of this deposit into the deposit in the balance sheet. So you have to see from which date?
31st March.
31st March. You have to see on the balance sheet date because this current and non-current classification has to happen on 31st March, right? Balance sheet as it. The balance sheet always reflects you the statement of financial position. It should always be as it. Okay, 31st March. Very good. Now let's move to the next question, and with the help of that question, we'll complete the concept of current and non-current classification of asset. So let me take you to question number 4. Okay, so question number 4 of this word file. I hope the word file is visible to everyone. Yes?
Yes.
Okay. Question number 4. An entity manufacture passenger vehicles. Okay. The time between purchasing of underlying raw materials to manufacture. So the time between purchasing of underlying raw materials to manufacture the passenger vehicles and the date the entity completes the production and deliver to its customer is 11 months. Okay. So this entity is into the business of manufacturing of vehicles. And the time when the company purchases the raw material, okay, enter into the assembly line, get the final outcome, get the final output, and deliver these vehicles to the customer is 11 months. Okay. It took 11 months to procure the raw material and deliver the final product to the customer. So what is your timeline? What is your time? What is your duration? Duration is 11 months. Customers settle the dues after a period of 8 months from the date of sale. Okay. So customers settle these dues after a period of how much? After a period of 8 months from the date of the sale. Okay. So the company has spent money to procure the raw material, and then company is doing a production. Now company is selling the goods, and then the company is getting the money from the debtors. So what is the timeline? When the company is spending the cash, the first cash, and the company is getting the cash back. So what is the total duration when the company is getting the cash? From spending the cash to getting the cash, what is the total duration?
11 months.
Whether in 11 months, whether company is getting a cash, because in 11 months company is delivering the goods, and after delivering the goods to the customer pay after 8 months. So customer को जब goods मिला उसके 8 months के बाद customer pay कर रहा है
19 months.
19 months. 11 plus 8, 19 months. Friends, there is a concept of operating cycle. Okay. And what is the concept of operating cycle? Concept of operating cycle says that operating cycle is a cycle when the cash has to be converted into a cash. When the cash has to be converted into a cash. What does it mean? It means that when the company purchases the raw material, the company has paid cash. Okay. Then the company started production. The company spent on labor, etc., etc. And then the company generated a final output. Okay. Then the company delivered the goods to the customer, and then the company is getting money from the customer, right? So when the company has spent cash and the company is receiving cash, what is the timeline? What is the duration? What is the time period? So this time period from spending cash to getting cash is 19 months. Okay, is 19 months. This is known as an operating cycle. Okay. So what is the concept of current and non-current asset? So non-current asset is very simple. An asset which is not a current asset is a non-current asset, right? But what is a current asset? Again, I am taking you back to my PowerPoint presentation. So friends, if the entity expects to realize the asset or intends to sell or consume it within the normal operating cycle, right? Then it is qualified as a current asset. So what is the operating cycle? Operating cycle is 19 months here, right? So let's see if the asset will be received within 19 months, it will be qualified as a current asset, otherwise non-current asset. Now let's complete the question. So from this paragraph, what we have concluded? From this paragraph, we have concluded an operating cycle of 19 months. Okay. Now, what is the question? Will the inventory and the trade receivables, be current in the nature? So when the company is delivering the goods to the customer, right? When the company is delivering the goods to the customer, so it will be received in 8 months. Okay. So whether 8 months is within the operating cycle of 19 months?
Yes, sir.
Yes. So this trade receivable has to be classified as current asset. Inventory. Again, this inventory will be getting sold in 11 months and then money will be received in 8 months, right? So whether this inventory will also be qualified as a current or non-current?
Current.
It is classified as a current. So now the second question is saying that assuming that the production time was say 15 months and the time lag between the date of sale and collection from customer is 13 months, will your answer be different? Assuming that the production time was say 15 months, means instead of 11 months, it is 15 months. Okay. And the time lag between the date of sale and collection from customer is 13 months. Will the answer be different?
No, answer not will be different. Only classification in notes will be within 12 months or more than 12 months.
No. So the question is saying whether this inventory and trade receivable, will be shown as current or non-current.
Current.
Why current?
Inventory or debtors are always classified as a current assets. Only noट्स वर्किंग नोट्स जो होते हैं उनके उसमें स्पेसिफाई करना होता है कि विद इन 12 मंथ्स हम रिसीव कर रहे हैं या मोर देन 12 मंथ्स.
See, inventory, I agree. So inventory, inventory by its nature So if it is the inventory which is held for sale in the ordinary course of business, okay, it will be classified as current, because the definition says that, it holds the asset primarily for the purpose of trading, right? Which means inventory. Okay. So inventory is current. But what about debtors? Right. In this question, it is saying that while the operating cycle is 19 months, and it is saying that assuming production time was 15 months, okay, and the collection from the date of sale to the collection is 13 months. Okay. In that case, whether your answer will be different.
No, sir. As long as it is within the operating cycle of that company, then it is considered as current.
Okay. Yes. Very good. So let's read the answer which is there in the Board of Studies material. Inventory and debtors needs to be classified in accordance with the requirement of Ind AS 1. And we have seen the requirement of Ind AS 1, which provides that an asset shall be classified as current if an entity expects to realize the same or intends to sell or consume it within the normal operating cycle. This is the concept which we have seen in my presentation. In this case, in the first case, the time lag between the purchase of inventory, and its realization into cash is 19 months, right? We discussed. Both inventory and the trade receivable would be classified as current if the entity expect to realize these assets in the normal operating cycle. Okay. Second, no, the answer will be the same. No means the question was whether your answer will be different. So that is why the answer is no. No, the answer is not different. Answer will be same. As the classification and inventory depends on the expectation of the entity to realize the same in the normal operating cycle. In this case, time lag between the purchase of inventory and realization into cash is 28 months, right? Both inventory and debtors would be classified as current if the entity expect to realize the asset in the normal operating cycle. So what does it mean? It means the operating cycle has changed, right? Because in the question it was written that the time lag will always be 13 months. Okay. So it is within 28 months and hence it has to be classified as what? Classified as current asset. Okay. So whether this concept is clear to everyone? Is that clear to everyone? This current and non-current classification, yes or no?
Yes, sir.
Okay. So friends, now let me take you again to my presentation. So we discussed what is meant by current asset. Current asset are those assets where the entity expect to realize the asset or intends to sell or consume it within the normal operating cycle. Second, it holds the asset primarily for the purpose of trading like inventory. Third, it expects to realize the asset within 12 months after the reporting period. For example, tender deposit, electricity deposit, right? Where you are not expecting that it is going to be refunded within 12 months, then it has to be classified as non-current. If you are expecting that, yes, I am going to recover within 12 months. So tell me when electricity deposit will be a current asset? The company has an office in Patna. Patna is the capital of Bihar. And the company has a head office in Delhi. The company wants to liquidate their office in Patna in next 3 months. And the company has deposited an electricity deposit for 50,000 rupees. So tell me whether this security deposit paid for Patna office is current or non-current. This electricity deposit paid for Patna office should be current or non-current. It has to be what? A very simple question. What you will write if this kind of question will come into your exam? The company wants to stop, the company wants to vacate, right? The company wants to cease the Patna office in next 3 months. Whether the electricity deposit paid for Patna office will be classified as current or non-current?
Non-current.
Non-current. Okay. Why non-current?
बस 3 महीने में ऑफिस विकेट कर रहे हैं ना.
Shweta is saying current. So we are vacating our office in 3 months. So whether 3 months is within 12 months or not. If we are
Yes.
vacating the office in 3 months, what does it mean? It means we have to surrender the electricity connection also. If I am liquidating my office, if I'm liquidating my premises, of course I need to surrender all the deposit. I need to surrender all the connections. When you surrender all the connections, you will get a security deposit also. You will get a refund of the security deposit, right? So why we have classified that electricity deposit as non-current? Because the intent of the company is not to get the refund of the security deposit, which is pertaining to electricity, right? Why? Because if you run your business, of course, electricity is required. But in this case, since they are vacating, they are liquidating, or they are just seizing that Patna office, they don't want to continue that office, okay? Then whatever connection they have taken, they will also, of course, surrender that connection, and then they will get the deposit back. Correct? Yes or no? Yeah. Shweta wants to ask some question. Yeah, Shweta. Shweta, would you like to ask any question? No?
No, sir. No, sir.
Okay. Okay, yes. And the last part is the asset is a cash or a cash equivalent as defined in Ind AS 7. So day after tomorrow, when we will have a class on Ind AS 7, so we will understand cash and cash equivalent. So if it is a cash, it is always a current asset. Or if it is a equivalent to cash, which means if it is a highly liquid investment, which is going to be converted into a non-amount of a cash without having a significant risk of change in value, right? So if it is a cash and cash equivalent, then it will also be classified as a current asset. Okay. An asset which is not a current asset will be classified as a non-current asset. Friends, now we are moving to current liability. Manikant, do you have any question?
Yes, sir.
Yeah.
Sir, actually, in the normal
Priyanka,
yeah.
guys, if you are not speaking, can you please mute yourself?
Okay. Is
Yes,
it
yes,
audible?
Manikant.
Yeah. So it expect to realize the set within 12 months after the reporting period. In the sense, after 31st March, it should be within 12 months until the
Yes.
next 31st March. So if normal operating cycle beyond that, example, we are starting 1st April one transaction in the sense raw material and the collection, everything happening after 24 months, then it should be non-current, right?
If the collection, see, so first of all, there are two ways of measurement, whether it has to be current or non-current. The first measurement is 12 months. The second measurement is operating cycle. So there are two ways. Okay.
Okay.
And why standard has included operating cycle? There are a lot of business which involves a long time of, which have a long gestation period, which involves a long time of a production period. For example, aircraft takes a longer period of time for getting ready for sale. Number one. Number two, so these kind of asset also takes a longer period of time for getting the money back. Okay, getting the money back means from the customer. They have a longer time of credit period, which is known as a credit period. Okay, so in a industry, when the production cycle or production time is, let's say, 18 months, okay, and the credit period in that industry is normally, let's say, 1 year. Okay. So 18 months is the production cycle. 1 year is the collection period. Okay. So what is the total period when your money will be converted into a money? Means cash will be converted into a cash. What is the
30
total
months.
period?
30 months.
18 plus 12, 30 months. 30 months means 2.5 years. Means you as a management, you will always say that in my kind of a business, I will always be needing a working capital of 2.5 years. Correct?
Yes.
In my kind of a business, I will always get a money when I'll spend my first cash. I always get a money back after 30 months, after 2.5 years, which means what is your operating cycle? 30 months is your operating cycle. 2.5 years is a operating cycle. Correct?
Yes.
Now, when you have to classify any asset, that whether it is a current or a non-current, then you look at that 30 months is a benchmark, okay, on the reporting date. So when you are standing on 31st March on the balance sheet date, you have to see whether it is current or non-current. Then you have to look at the operating cycle period, okay, for any kind of asset. Is that clear? For example, trade receivable, for example, inventory, for example, prepaid expenses. For any asset, you have to see whether I am going to realize, whether I am expecting to realize this asset within a period of 30 months. If answer is yes, it has to be current. If answer is no, it has to be non-current.
Okay.
Right?
Sir. Yeah. Thank you.
Understood?
Yes,
Okay.
sir.
Now let's move to the current liability. Friends, asset is a resource, liability is an obligation. Okay. So what is the meaning of current liability? The meaning of current liability is a liability which is going to be settled in the normal course of operating cycle. Should I explain the operating cycle again? I've already explained the operating cycle. Okay. Or due to be settled within 12 months of balance sheet date. Can you see the difference between the wordings in asset and liability? And it is very important for you guys to, see the question in the exam very carefully. When it is an asset, the word used was expect. When it is a liability, what is the word used? When it is a liability, the word used is what? Due. Due. Due means contractual, right? Due means contractual. Okay. So when it was an asset, the word used was expect. Are you expect to realize this money? If answer is no, it is a non-current asset within an operating cycle of 12 months. But here for the liability, whether it is going to be settled in the normal course of operating cycle or due to be settled within 12 months of the balance sheet date, okay, it will be classified as current liability. Or that liability is held primarily for the purpose of trading, or there is no unconditional right to defer the settlement for at least 12 months. Okay. No unconditional right to defer the settlement. Sitting on 31st March, when you are looking at the balance sheet classification, you have to see, do I have a right? Do I have a right to defer this settlement for at least 12 months? For example, I have purchased a car from a car dealer for rupees 10 lakh. And that car dealer was my friend. I told him that, okay, I'll pay you this money within a week or so. Okay. So I went to him and I bought the car and I told him that I'll pay money after 10 days, let's say. So I bought the car on 27th March 2025. The balance sheet is 31st March 2025. The balance sheet is 31st March 2025. I bought a car is my asset, and there is a liability also, which is the payment for the car. There was no credit period, okay? But since he was my friend, I told him and he agreed. On 31st March 2025, right? My chartered accountant was asking, sir, whether we should classify this car loan, right? The money which you have to pay for this car as a current liability or non-current liability. I told him not to worry. So he is my friend and I'm not going to pay him at least in the next 1 year or in the next 1 year or let's say 15 months. I'm not going to pay him. I will pay him after a year. After a year. Friends, whether this liability is current or non-current. Whether this liability is current or non-current. Shweta is saying non-current. What is your answer? Whether this liability is considered as current or non-current.
Non-current asset, sir.
Liability. Whether it is a non-current liability or current liability.
Non-current liability.
So it is my intention that I'm not going to pay him. It is my intention. Okay. But when this liability was due to be settled, I purchased the car on 25th March and the payment was immediate. There was zero credit period. Since he was my friend, and that is why I told him that, friend, I'll pay you after 10-15 days. He said, okay. But my intention is not to pay him at least in a year. So my intention is to pay him after a year. So I'm asking you a simple question. When this liability was due to be settled? Maximum 10 days. If he has agreed that, okay, you can pay me after 10 days. So 10 days? Yes or no? Immediate ही था ना वो. It was immediate or it was 10 days after. Okay. Second question I'm asking. Whether I have an unconditional right to defer the settlement for at least 12 months.
Yes.
Can I pay him that, okay, since we have written into a contract and you have given me a credit period of 1 year, I don't have any unconditional right to defer the settlement for at least 12 months. I don't have any right to defer the settlement for at least 12 months. So whether this liability will be current liability or non-current liability. Friends, this is a revisionary class. And I am teaching like I am teaching for the first time this concept. This liability will be classified as a current liability. Okay, this liability will be classified as a current liability because this liability was due to be settled within 10 days. What has been agreed with my friend? Number one. Number two, I don't have any right to defer this settlement. I don't have any unconditional right to defer the settlement for at least 12 months. Right. Second example, I have taken a bank loan. Okay. And from where I have taken a bank loan? From the bank, of course. So I have taken a bank loan for 1 crore rupees. And it was agreed with the bank. Of course, the sanction letter, the terms and condition, the loan agreement has to be signed. And in the loan agreement, it was agreed that I will pay the money back to the bank after 3 years. Okay. So bank will charge interest for that. So it was agreed. Now, on the first balance sheet date, I have a bank loan, I have a liability. Tell me, if bank will come to me and bank will ask me that please pay me back after 3 months, can bank ask me? Yes or no? I have a loan agreement with the bank that this payment is required after 3 years. So do I have an unconditional right to defer this settlement after 12 months? Yes or no? Yes. Yes. There was a loan agreement which was signed. Accordingly, I have invested the money into my bank, into my business. Okay. Accordingly, I have invested the money into my business because I was aware that I have to pay to the bank after 3 years, not today, not in the next 3 months. Okay. So in this case, I have an unconditional right to defer the settlement at least after 12 months. And hence this bank loan will be classified as a non-current liability. But the payment of car, but that payable for the car, the liability for the car has to be classified as a current liability. I hope this was clear to everyone. Now let's go back to the question and understand the concept of current and non-current liability. Okay. Yes. Question number 2. Question number 2. An entity has taken a loan facility from a bank that is to be repaid within a period of 9 months from the end of the reporting period. An entity has taken a loan facility from the bank. Okay. which has to be repaid within a period of 9 months from the end of the reporting period. Okay. Prior to the end of the reporting period, the entity and the bank enter into an arrangement whereby the existing outstanding loan will unconditionally roll into the new facility, which expires after a period of 5 years. So for the initial loan, what was the period from which this loan is going to be repaid? It is 9 months. Okay. So on the balance sheet date, as per the existing terms and condition of the loan, is this loan has to be repaid within a period of 9 months from the end of the reporting period. तो इसकी classification क्या होगी? What should be the classification? Just after reading the first two lines, what is the classification? This liability has to be current, right? Okay. So then it is written prior to the end of the reporting period. Reporting period के खत्म होने से पहले, prior, the entity and the bank enter into an arrangement. They have entered into an agreement whereby the existing loan will unconditionally roll into a new facility which expires after a period of 5 years. So before closure of the reporting period, before balance sheet date, the entity and the bank agreed that, okay, nothing doing. This loan is not going to be repayable after 9 months. So this has to be payable after 5 years. Okay. So that loan has to be rolled into the new facility. The first question, how should such loan be classified into the balance sheet of the entity? Whether it has to be classified as current or non-current. Very simple. Whether this loan has to be classified as current or non-current. Guys, I can see the response only from 2-3 participants, like Sweta has responded. Rahul has responded. Manikandan is also saying non-current. What about others? These are the revisionary classes, right? And in the revisionary classes, you're expected to participate. Otherwise, there is no point. One more answer, it is non-current. Yes, it is non-current because now the company has an unconditional right to defer the settlement. On the reporting date, the agreement has already entered. Bank has already agreed. It was sealed, stamped and delivered. It was already agreed that the money has to be payable after 12 months, not before 12 months, right? So it has to be classified as non-current liability. Question number 2. Will the answer be different if the new facility is agreed upon after the end of the reporting period? So here, this new arrangement was agreed before end of the reporting period. It means on the balance sheet date, when you are classifying this current, non-current, it was already agreed in the first case. Question number A. But the question number B says that on the balance sheet date, it was not agreed. It was agreed after the balance sheet date. So whether your answer would be different if this was agreed after the balance sheet date? Yeah.
Yes,
So what is the answer? Whether it should be current or non-current?
it will be current then.
It will be current. Why? Because you have to see on the reporting date whether you have an unconditional right to defer the settlement after 12 months, right? So if it is yes, then it is current. So if it is yes, that you have a right, unconditional right to defer the settlement after 12 months, it is due to be settled after 12 months, then it has to be non-current, otherwise it is current. So on the balance sheet date, the liability was repayable after 9 months only because it was not agreed on the balance sheet date, right? So yes, in this case, the answer would be what? The answer would be current. Okay. So let's see what is written in the ICAI Board of Studies material, just for the sake of again revision. The loan is not due for payment at the end of the reporting period. We are talking about answer number A. the entity and the bank have agreed for the said rollover period to the end of the reporting period for a period of 5 years. Since the entity has an unconditional right to defer the settlement of the liability for at least 12 months after the reporting period, the loan should be classified as non-current. Okay, this is what you guys have answered. B part, yes, the answer will be different if the arrangement for rollover is agreed upon after the end of the reporting period. Since assessment, this part is very important, since assessment is required to be made based on the existing loan facility on the reporting period. Okay, on the reporting period. As at the end of the reporting period, the entity does not have an unconditional right to defer settlement of the liability at least 12 months after the reporting period. Hence, the loan is to be classified as current. Hence, the loan has to be classified as current. Okay. Now, what is the answer of question number C? Will the answer to A be different? क्या A का आंसर डिफरेंट होगा? Will the answer to A be different if the existing facility is from one bank and the new facility is from another bank? Tell me. So in question number A,
Yes.
in question number A, it was written that the existing facility from the bank for 9 months, that has to be rolled into the new facility from that bank only for 5 years. But now in this question, this facility 9 months is from one bank and the new facility for 5 years will be from another bank. What will be your answer?
Yes, existing will be current and new facility will be non-current.
Yes. So before 31st March, you have entered into an agreement with another bank and another bank has agreed to pay you a loan which has to be repayable after 5 years. Correct? But the existing bank, the loan liability from the existing bank, it has to be repayable after 9 months. It has to be repayable after 9 months. So from one bank, you have to pay that bank within a 9 months from the end of the reporting period. And another bank will pay you, right? Another bank will pay you the money, and from that money you will pay to this bank. Okay. So this new liability, when it comes, the new bank liability, when it comes, it will be non-current. But the existing bank liability will be current. Okay. Existing bank liability will be current. Is that clear? Is that clear? Clear or clear? Is it clear in mind or clear from mind?
Yes, sir. Thank you.
Clear in mind or from mind? Yes. So what is written in the answer? In the answer, it is written that, yes, the loan facility arranged with the new bank cannot be treated as refinancing. Okay. As the loan with the earlier bank would have to be settled, which may coincide with the loan facility arranged with the new bank. In this case, loan has to be repaid within a period of 9 months from the end of the reporting period. Therefore, it will be classified as current liability. Okay, very clear. Last question from this part only. Will the answer to A be different if the new facility is not yet tied up with the existing bank? Right? But the entity has the potential to refinance the obligation. Means, like the question says that the existing facility which is payable after 9 months will be rolled over, and the new facility from the same bank has to be for 5 years, right? This was the arrangement for question number A. But now D is saying whether your answer will be different for question number A if up to the reporting period, this new facility has not been agreed with the bank. There is no agreement. There is no arrangement which says that this new facility has to be rolled over. So this existing facility will be rolled over to the new facility. There is no agreement before the reporting period. But the entity is sure. The entity has a confidence that yes, I will be able to refinance the obligation. I will be able to refinance the obligation. So in question number D, whether it should be current or non-current? this loan liability which is repayable after 9 months, whether it has to be current or non-current? What is the answer? It has to be classified as current. It has to be classified as current, right? Because again, the potential intention, these does not work for liability. Okay. So let's see the answer, which we are already aware. Yes, the answer will be different. Yes, the answer will be different. Okay. Like in earlier, the answer was non-current. Why? Because the facility was already agreed. Yes, the answer will be different and the loan should be classified as current. This is because as per paragraph 73 of Ind AS 1, friends, you are not required to write down the paragraph in the exam. Okay. You are not expected to write the paragraph, but of course, it is ICAI official material, and wherever they have seen that they have feel that it is required, so they have written this paragraph, but it is not required from the students. This is because as per para 73 of Ind AS 1, when refinancing or rolling over the obligation is not the discretion of the entity, is not at the discretion of the entity. For example, there is no arrangement for refinancing. The entity does not consider the potential to refinance the obligation and classifies this obligation as a current liability. Okay. Is that clear? Is that clear? Yeah. So we have covered 3 questions as of now, right? We have completed this question number 1, which is on the current and non-current classification of asset, which was largely for the intention within 12 months. Then we have covered question number 2, which is again current and non-current liability. Okay. Where we have seen that the concept of due to be settled, the concept of unconditional right to defer the settlement. Then we have seen what? The question on operating cycle. The question on operating cycle we have seen. Okay. This passenger vehicles. Now let's discuss question number 3. Question number 3. In December 2021, 20x1, an entity entered into a loan agreement. An entity. So Prithvi Raj is asking, sir, whether the paragraph number needs to be quoted. Sir, whether the paragraph number needs not to be quoted or the text. So paragraph number is not required to be written in the exam, right? So it is not required. If you are highly confident that your paragraph number is correct, you can write that. But if it is, but don't write wrong paragraph number. Okay. But technically speaking, my guidance is so if I'll guide you. So my guidance is not to write paragraph. Okay. Paragraph number. Because from students, it is expected that you guys should be well versed with the concept. Okay. If you are writing the concept, for example, you are writing that, the company does not have unconditional right to defer the settlement on the reporting date in accordance with Ind AS 1, and hence it has been considered as a current liability. So that is more than enough. You are not required to write paragraph number 66, paragraph number 69. For example, paragraph number 66 says that what is current, what is non-current. But you are not required to write this paragraph number 66. Okay. You just need to write what is the concept. In December 20x1, an entity entered into a loan agreement with a bank. The loan is repayable in 3 equal annual installments. The loan is repayable in 3 equal annual installments starting from December 2005. Starting from December 2005. 20x5. Okay. So this entity has taken a loan in December 20x1. There is a repayment in 3 equal annual installment. The first installment, the installment is starting from December 20x5, means after 4 years. After 4 years. One of the loan covenant is that an amount equivalent. So one of the loan covenant, what is meant by loan covenants? The terms and condition of the loan. Okay. One of the loan covenant is that an amount equivalent to the loan amount should be contributed by promoter by 24th March 2002. Okay. So one of the condition from the bank was that whatever is the loan amount, the same amount should be contributed by the promoters of the company by 24th March 2002, means after 2 months and 24 days. Failing which, the loan becomes repayable on demand. If the promoter will not be able to, pay this money, if the promoter will not be able to contribute this money by 24th March 20x2, so that this loan become repayable on demand, it will be considered as a default of loan covenant. Okay. As on 24th March 2002, the entity has not been able to get the promoter contribution. So this was the condition. Now this condition has been breached. What happened now? On 25th March 2002, the entity approached the bank and obtained a grace period of up to 30th June 20x2 to get the promoter contribution. Have you understood the facts of the case so far? The loan was taken in December 20x1. There was a condition of the bank that you have to contribute. The promoter has to contribute the equivalent amount into the company, right? The installment was to be start from December 20x5 after 4 years. Okay. As per the agreement with the bank, as per the condition of the bank loan, so the promoter has not contributed any money. Okay, the promoter has not contributed any money. So now promoter has approached the bank and the bank has agreed to provide the grace period of 30th June. The bank has told, okay, not to worry. If you have not contributed till 24th March, I am giving you 3 months time. So please do it by 30th June. Okay. Please do it by 30th June. The bank cannot demand immediate repayment during the grace period. And bank told, okay, up to 30th June, I will not demand any payment. But after that, of course, yes. The annual reporting period of the entity ends on 31st March 20x2. Okay. 31st March 20x2. Now, as on 31st March 20x2, as on 31st March 20x2, how should the entity classify the loan? What is the classification of this loan? The loan is repayable on demand, right? The loan was repayable on demand. The bank has given the grace period up to 30th June. And on 31st March, the grace period was 3 months from the reporting date.
Non-current.
It is non-current?
Yes, non-current.
Why it is non-current?
Because before reporting period, we get extend compliance. That's why.
No, but what is the time period? Up to which period we got the extended compliance?
Up to which period?
30th June 20x2?
Yes.
The bank has given the grace period up to 30th June 20x2 only. What is the balance sheet date?
Balance sheet date is 31st March 12.
31st March 20x2, right?
Yeah.
So if this entity will not be able to contribute the money in the next 3 months, right? Then what will happen?
Then it will become current then.
No, what will happen? So they have to pay because this loan has already become repayable on demand. So just think about the series of events. In December 20x1, the company has taken a loan. Simple. This loan was non-current. Why? Because the first installment was to be paid after 4 years. Okay. When this loan was taken. But there was a condition attached to the loan. There was a covenant attached to the loan. And what was the covenant? The covenant was that promoter should also contribute the equity. Correct? The promoter has not contributed the equity before end of the reporting period. which was 24 March 20x2. Okay. Yeah. The promoter has not contributed the equity before 31st March 20x2. So this loan become repayable on demand, yes or no? It is written in the question.
Yes.
On 31st March 20x2, the company has made a default of the term and condition of the loan agreement, and due to which this loan become repayable on demand. So right now this loan is repayable on demand. Okay. But the bank and company, so company talked to the bank and bank has given them grace period of 3 months only. So as on reporting date, whether this default exists or not, as on reporting date, whether the default
No.
exists or not, no.
No, sir.
So they have defaulted now. So bank has given a grace period of 3 months only, right? If they will not able to contribute the equity, if they will not be able to contribute the equity, so then what happen? Then what will happen? If they will not able to contribute the equity, then what will happen? अगर वो
Then
equity
it will
contribute नहीं कर पाएंगे तो क्या होगा?
then it will become payable on demand.
It will become
Payable on demand.
payable on demand. Means right now the nature of this loan is current liability only. The nature of this loan is right now the nature of this loan is repayable on demand only. The only thing is bank has given them a grace period of 3 months. They don't have unconditional right to defer the settlement after 12 months. Either they have to meet this condition or they have to pay the money. And as on balance sheet date, because they have already made a default. Okay. So in this case, on 31st March 20x2, this liability has to be classified as a current liability. So friends, an entity classified, now what Ind AS 1 says, an entity classified the liability as non-current if the lender agreed by the end of the reporting period to provide a period of grace, period at least 12 months after the reporting date. At least 12 months after the reporting date, within which the entity can rectify the breach and during which the lender cannot demand immediate payment. In the present case, following the default, the grace period is within which an entity can rectify the breach is less than 12 months after the reporting period. Hence, as on 31st March 20x2, the loan will be classified as current, right? So, if this grace period instead of 30th June, if this grace period would have been given up to 31st March 20x3, then
Non-current.
then it has to be non-current. But here the grace period का मतलब क्या है? Grace period का मतलब ये है कि या तो आप इसको ठीक कर लो नहीं तो मुझे पैसा दे देना, right? Because default has already occurred. Okay, and the period of rectification, the period to rectify the breach is not after 12 months, it is within 12 months, which is 3 months. And hence, this liability has to be classified as a current liability. Okay, this liability has to be classified as current liability. Okay, so 3 students have given the right answer. Now, second question. Now there is a twist in the second question. What is the second question? Assume that in anticipation that it may not be able to get the promoter contribution by due date. Okay. Assume that in anticipation, they are anticipating that it may not be able to get the promoter contribution by due date. In February 20x2, the entity approached the bank and got the compliance date extended up to 30th June 20x2 for getting the promoter contribution. Have you understood what is given in the question? The question says that since promoter has to contribute to the equity in Feb and the timeline was 24 March 20x2, the timeline was. Now promoter has anticipated that in February, they have anticipated probably we will not be able to contribute this money, and proactively they went to the bank and they told the bank, see, we need to make this compliance by 24th March. We are sitting in February and we need more time. Okay, we need more time. And bank has agreed. Bank has agreed to extend this compliance. Can you please keep on mute? Guys, whomsoever is unmute, can you please keep on mute? Devrat, can you please keep on mute? Yes. So the initial compliance date was 24th March 20x2. Now they went to the bank proactively without any default, right? And bank has extended this compliance date to 30th June 20x2. Now my question is, what should be the answer? What should be the answer to this? My question
Non-current.
is, what should be the answer to this? Whether it has to be current or non-current? Just think.
Non-current. Non-current, sir.
Guys, what should be the answer for this? Current or non-current? And if non-current, why? If non-current, why? Please tell me.
Because before due date, we get compliance date extended.
Yes.
And whether if it is within 12 months or more than 12 months, it should be classified as non-current liability.
Yes. So when this loan was taken, it was a non-current liability. Why? Because the first installment was due after 4 years. Okay. And there was a term and condition which was attached to this loan. And what was the term and condition? The promoter has to contribute to the equity. And the compliance date was 24 March 20x2. So up to 24 March 20x2, it was non-current, right? Because the compliance date has not breached. But in March, on the March reporting date, of course, the compliance date has not come because they have extended the compliance date proactively. They have not defaulted. They have proactively extended the compliance date. It means the breach of covenant was not existing on the 31st March. There was no breach. Okay. And the company, the unconditional right to defer the settlement was after 4 years, which is 3 years, 9 months on 31st March. Hence, in this case, this liability has to be classified as a non-current liability because since the compliance date has extended, okay, so there was nothing called as a grace period. The compliance date has extended. So the company has an unconditional right to defer the settlement on the reporting date for the next 3 years and 9 months. Okay. So what is written in the study material? Ind AS 1 deals with the classification of liability as current or non-current in case of breach of a loan covenant and does not deal with the classification in case of expectation of breach, right? You cannot say that I am expecting this breach will happen on 30th June. Okay. The breach has not yet happened. In this case, whether actual breach has taken place or not is to be assessed on 30th June 2002. That is after the reporting date. Consequently, in the absence of actual breach of the loan covenant on 31st March 20x2, the loan will retain its classification as non-current. Do you have any question on this question? Friends, do you have any question on this question? Please tell me yes or no. Any question? Any question on current and non-current?
Sir, can you explain the answer again of part B?
Can you explain again the answer of?
Answer of part B.
Yes. So what I told you for the liability, you have to see the due date. Okay. When the liability is due to be settled. Number one. Number two, you have to see on the reporting date whether you have unconditional right to defer the settlement of this liability after a period of 12 months. If answer is yes, it is a non-current liability. If answer is no, it isn't a current liability. These are the two things. The intention, expectation doesn't work on the liability part, right? In this question number 3 and part B, so the loan was taken on December 20x1. The first installment has to be paid after 4 years. So what is the nature of this liability? Non-current. Balance sheet date पे non-current होगा ना? It has
Yes,
to be
sir.
non-current, right? But there was a condition which was attached to this loan. And what was the condition? The condition was the company has to contribute the equity before March, right? So before the due date, the management proactively went to the bank. Proactively पहले चली गई बैंक के पास और बैंक को बोला कि please extend my compliance date, please extend my this loan term and condition from 24th March to 30th June, which will fall after 31st March, right? Correct? So on 31st March 20x2, tell me whether the company has an unconditional right to defer the settlement after 12 months or not, sitting on 31st March, because they have not breached. कंप्लायंस डेट ही आगे बढ़ गई ना, उन्होंने कोई ब्रीच नहीं किया, तो इसका मतलब कंप्लायंट ही है अभी तक तो. You will not say that no, I will not make a promoter equity contribution and hence I will show this liability as a current liability. You have to wait till 30th June. You have to wait till the time the event has to happen. When the event will happen, for example, you have not contributed the equity, promoter has not contributed the equity, in that case, that liability will be classified as a current liability. But you have to wait till 30th June, right? Because on 31st March, on the reporting date, the compliance date is still 30th June. Okay. The company has not actually breached. Okay. So on 31st March, the company has full right. The company can say that my obligation is to pay after 4 years. When the bank will come and bank will ask the money, company will say that, listen, I have a timeline till 30th June to fulfill this condition, and my payment obligation is 4 years. My payment obligation is not after 3 months. Okay. Is that clear? आपको 31st March पे देखना है. Is that clear?
Yes, sir.
Yes, Mr. Saminathan, balance sheet date is important to classify as current and non-current. Yes, balance sheet date is important. Okay. So friends, it's 8:22 now. Let's have a 8 minutes break and we will start at 8:30. Okay. Let's have a 8 minutes break. Yeah. So friends, the standard Ind AS 1 presentation of financial statement. So we completed 4 questions from the ICAI study material. We'll cover 2 more questions, and we'll cover some multiple choice question also, right? Just to check your knowledge. So friends, this standard talks about what are the component of the financial statement. Like it talks about the balance sheet. Okay. What is the guideline for balance sheet? It talks about statement of profit and loss. Can you tell me the new section in statement of profit and loss, which was not there earlier? The new component, new section in statement of profit and loss.
Changes in equity.
I'm asking statement of profit and loss. A statement of changes in equity is a separate statement. Can you tell me what is the, a new section in statement of profit and loss? P&L में एक नया section कौन सा आया है Ind AS में? Have you heard about other comprehensive income, OCI? If you have gone through with Ind AS 1 video, so you must have found the concept of other comprehensive income, OCI, right? So this statement of profit and loss includes other comprehensive income as well. What is other comprehensive income? So other comprehensive income is a separate section in the profit and loss where few line items have been given like these. This is like a reserve. This OCI is kind of a reserve where there are some few items which has to be, where the impact has to be taken to the OCI, other comprehensive income, right? So you can refer the detailed video where the structure of the statement of profit and loss has been defined. That what is statement of profit and loss? It starts with revenue, then expenses, then profit before tax, then tax expense, then profit after tax, then your other comprehensive income, like revaluation surplus on property, plant and equipment. The impact will go to the other comprehensive income. Okay. And the total of profit after tax plus other comprehensive income is equal to total comprehensive income. Okay. Then the next part is statement of changes in equity. Then statement of cash flow is there. Okay. Then notes to accounts, which includes accounting policy and explanatory information. And at least 1 year comparative is required for all the items in the financial statement, for balance sheet, for statement of profit and loss, for statement of changes in equity, for a statement of cash flows and notes to accounts. Every notes to accounts, like related party disclosure, current year and last year number is required to be given. So at least 1 year comparative is required. And the third, balance sheet. So friends, in our old days in accounting standard, if there is a correction of error, prior period error, life was very simple. In the current year, if you have detected an error, right, what you will do? Simple, you will take the impact of the error and you will show that impact of the error in the current year P&L as a prior period error. But in Ind AS, it is very stringent. Ind AS says that if there is a correction of prior period error, which is required, which you have detected in the current year, you have to restate your comparative period. Means you have to restate your comparative number also. And you have to correct your opening balance of the comparative period also, right? It means you have to give the third balance sheet, which is opening date of the comparative period balance sheet. And you have to correct your opening balances of the comparative period also. For example, you have found an error that the property, plant and equipment was wrongly depreciated 5 years back. Okay. So you found this error in the current year 24-25. 2024-25. Balance sheet date is 31st March 25. So you will provide current balance sheet and you will provide comparative balance sheet also, which is 31st March 2024. If current year is 24-25, what is the comparative year? 23-24 is the comparative year. Correct? 23-24 is the comparative year. What is the opening date of the comparative year?
1st April 23.
1st April 23. So you will be requiring 3 balance sheet. 31st March 25, 31st March 24 and 1st April 23. In 1st April 23, you have to take the impact of the error from the date of the error up to 31st March 2023, which will be the corrected opening balance on 1st April 23, right? And then you need to correct your comparative number, and you need to correct your, of course, you need to present the right current year number. So this is the concept of third balance sheet. This concept of third balance sheet is required when the entity has corrected the prior period error and the entity has changed the accounting policy, right? So you can refer the detailed video, and this concept was again discussed in Ind AS 8. When you have a session on Ind AS 8, so this concept was discussed, that what is the treatment of correction of error, what is the treatment of change in accounting policy, along with the disclosure in the notes to accounts. Okay, so these are the component of the financial statement. What are the element of the financial statement? Tell me, what are the element of the financial statement? Can anyone tell me what are the element of the financial statement? पंच तत्व कौन से हैं? What are the element of the financial statement? Yes.
Balance sheet, P&L, cash flow statement.
My question
Notes
is,
to
what are the
accounts.
element of the financial statement? And what you are saying, it is component of the financial statement. Yes. Samyanathan has given a right answer. He has written that asset, liability, equity, income, and expense. There are three elements to the balance sheet and two elements to the P&L. So whatever name you take, it will get fitted into these five elements of the financial statement: asset, liability, equity, income, and expense. Okay, asset, liability, equity, income, and expense. Okay, so these are the five elements to the financial statement. Okay,
But sir, I have a doubt.
What are the component of the financial statement? Balance sheet, statement of P&L, statement of changes in equity, cash flow statement, notes to accounts are the component of the financial statement. Yes.
Yes, sir. I have one doubt. When I have read the audit now, there is a line that which identifies financial statement which comprises elements such as balance sheet, P&L, notes to accounts.
So probably loosely they are talking like that. They are, saying like that. But when you see Ind AS 1, in Ind AS 1, the component is defined, right? So Ind AS 1 says that these are the component of the financial statement, right? So element is a granular part of the component. Component are the bigger part, like balance sheet, P&L. Okay. So in just talking sense, जैसे कहते हैं ना, आप audit fee का provision कर लो. Have you heard about this? Please make a provision for audit fee.
Yes, sir.
But whether audit fee is a provision or a liability, I mean to say whether audit fee is a provision or it is accrued expenses. It is accrued expenses. It is not a provision. When you read Ind AS 37, provision is a liability of uncertain timing or amount. There is nothing called uncertain timing or amount in audit fee. You have to make an audit. You have to complete an audit. You have to issue an audit report. It is for the definite period of time. Correct. So probably it was more like a talking sense, but officially these are the component. Element is asset, liability, equity, income, and expense. Okay. Yeah. Clear?
Yes, sir.
Okay. So friends, this Ind AS 1 also talks about the general features or overall consideration. Okay. And of course, Ind AS 1 is a fundamental standard. It is mix of theory, right? There is less practical, more theory. Okay. But yes, I can say that this standard is very practical also, like current and non-current classification. In your examination, this current and non-current classification is very important. If a question will come from Ind AS 1, very, very, very important. Number two, the third balance sheet concept, which you will read in detail in Ind AS 8. When you will have a class on Ind AS 8 revision, so this concept was again taken up in detail. Okay. So these 2-3 aspects are very important in Ind AS 1. Now, what else has been given in Ind AS 1? So Ind AS 1 also provides some general features or overall consideration, right? For example, Ind AS 1 says that the financial statement will reflect true and fair view if it is complied with all Ind AS, right? So para number 16 of Ind AS 1, I know that para, I remember that para, and hence I'm quoting, but you're not required to quote that para. So Ind AS 1 says that there is a requirement of giving a statement of compliance, right? Like if you have seen the audit report, the auditor says that the financial statement of XYZ Limited, let's say Reliance Industries Limited, the auditor says that the financial statement of Reliance Industries Limited has been prepared in accordance with Ind AS 1 as notified under Section 133 of Companies Act 2013, and hence the financial statement are reflecting true and fair view. So who is saying that financial statement are reflecting true and fair view and it is complied with all Ind AS? Who is saying? कौन कह रहा है? It is auditor. और auditor कैसे कह रहा है? Through which document? The auditor is saying this. The auditor is saying this through audit report. The auditor is saying this through audit report. Right? Yes or no? Yes, auditor is saying this through audit report. But who is responsible for preparation of financial statement?
Management.
Financial statement are the property of the management, company, okay, entity. So जिसकी property है वो नहीं कह रहा कि financial statement are reflecting true and fair view. So that is why in Ind AS 1 there is a requirement under para number 16, okay, which says that management has to give an explicit and unreserved statement of compliance with all Ind AS. Management has to give an explicit and unreserved statement of compliance with all Ind AS. मैनेजमेंट को सारे Ind AS की explicit और unreserved statement of compliance देनी है, right? सारे मतलब whatever Ind AS is applicable to the company. So management has to write under the section statement of compliance in the notes to accounts. Management should say that our financial statement has been prepared in compliance with all applicable Indian accounting standards, right? Going concern, your financial statement has to be presented on a going concern basis. This is a fundamental accounting assumption, okay? But if the going concern is deviated, for example, there was a plastic manufacturing company. Okay. So on 28th February, the government has come up with an announcement that all the plastic manufacturing companies will be banned in Delhi after 30th September 2025. And this announcement came on 28th February 2025. Let's say Manikand is the auditor of that company. Okay, so his boss, his principal has sent him for the audit for closing 31st March 25 balance sheet. So Manikand, will you prepare that balance sheet? Will you audit that balance sheet on a going concern basis or not on a going concern basis? This balance sheet will not be prepared on a going concern basis. You are right, Shweta. Why? Because on 31st March 2025, Manikand knows that as per the government announcement, this company has to shut down its operation by 30th September. Means this company will be able to survive only after 6 months from the end of the reporting period. And hence, the financial statement should not be prepared on a going concern basis. Okay, it should not be prepared on a going concern basis. So friends, if the entity has decided to cease trading, if the entity has decided to stop the business within a period of 12 months from the reporting date, or the company does not have any option except to shut down the business, like in this case, as I told you, government has given an announcement, right? In that case, the financials should not be prepared on a going concern basis if the business will not run in the foreseeable future. Okay, right? Second, material uncertainty. For example, the going concern is there, but it is dependent on happening or non-happening of some event. Okay. For example, the company is into the huge debt crisis. The company has made a loss and the company has taken a huge loan from the bank, right? And now the company is in discussion with the banks that if you allow me some waivers, I will be able to survive, otherwise not. And the discussions were going on. Okay. So because of this huge debt crisis and because of the loss, right, the company has a material uncertainty relating to the going concern. So in that case, if there is a material uncertainty that we don't know whether the company will be able to survive, will not be able to survive, there is a material uncertainty which is depending but on the happening or non-happening of some future event, right? Which is depending on others' help. So if there is any material uncertainty, that material uncertainty is also required to be disclosed in the notes to accounts. So these are the features which are given in Ind AS 1 for the financial statement. Accrual basis. Whether your financial statement has to be prepared on accrual basis or non-accrual basis. I mean to say cash basis. As per Companies Act, as per Ind AS 1, what it says, whether financial statement has to be prepared on accrual basis or cash basis. Accrual basis is mandatory, right? Accrual basis. What is meant by accrual basis? For example, the company has made a sale on credit. The company has made a sale on credit, okay, for rupees 5 lakh on 31st March. So whether this sale has to be recorded, I mean to say whether income and debtors has to be recorded or not. The income and debtors has to be recorded. So it means that transaction has been recorded on which it is happening, not at the time when the cash is receiving. Okay. So for example, the cash is received on 15th of April. So the income and the debtor has to be recognized on 31st March. When the cash will be received, your cash account will be debited and debtors will be credited, right? So the books of accounts, the financial statement has to be prepared on a accrual basis except cash flow statement. Your cash flow statement has to be prepared on a cash basis, right? But otherwise, your entire financial statement has to be prepared on an accrual basis. Aggregation and materiality. What is meant by aggregation? All like item. Have you seen the balance sheet of any big listed company? Have you seen the annual report of any big listed company? Let's talk about Reliance. Let's say Reliance has a turnover of, for example, 10 lakh crore. The revenue from operation of Reliance is 10 lakh crore. How big is the number? 10 lakh crore. This is the number Reliance has. So now this 10 lakh crore number. So this is coming into a single line item revenue from operation. Single line item revenue from operation of 10 lakh crore. And just one line item which says that revenue from operation in the P&L 10 lakh crore. Now tell me whether this 10 lakh crore is the outcome of a single transaction to a single customer through a single invoice on a single date. No. This 10 lakh crore is an outcome for the entire 1 year with multiple invoices raised to multiple customer at a multiple point of time. Correct? So, but it has been shown as a single line item revenue from operations, 10 lakh crore. Okay. So friends, this 10 lakh crore has been aggregated, all the like item, all the revenue, all the sales, all the invoices which has been raised to multiple customer at a multiple point of time has been aggregated, right? And shown as a single line item revenue from operation. So this is known as a concept of aggregation. So all like item has to be aggregated, right? So that it will be, the financial statement will be readable. Okay. Second, all the immaterial item needs to be aggregated. For example, you are not reflecting, you are not presenting every small line item in the P&L or in the balance sheet. Few items you are aggregating, for example, other current asset, other non-current asset, other income, other expenses, correct? So this is the concept of aggregation. In materiality, all the material item, like your Schedule 3 also given you a materiality threshold. Schedule 3 says that any income or expenses which is more than 1 million, which is 10 lakh, or 1% of the revenue from operation, whichever is higher has to be disclosed separately. Correct? So likewise, if any amount which is material, it has to be disclosed separately in the notes to accounts. Okay. Or on the face of the balance sheet, P&L, etc., etc. Offsetting. What is meant by principle of offsetting? Deferred tax asset and deferred tax liability. So your balance sheet asset and liability needs to be offsetted. or income and expenses needs to be offsetted if it is permitted by the standard, right? Let's say, I am supplying goods to Saminathan. Okay. So Saminathan become my customer and I am the vendor or I am the supplier. I am booking a revenue and I'm also booking a receivable from Saminathan. Saminathan is also giving me some services. Okay. In this case, Saminathan become my supplier and I become the customer. I am selling goods to Saminathan. Saminathan is providing me some services, right? So what is my relation with Saminathan? He is my customer as well as he is my supplier. He is my vendor. Okay. So for the goods which I am selling, I have to receive the money back from Saminathan. For the services which I am receiving, I have to pay him back. This is the normal commercial transaction. And on every month end, we are settling in net. Means, for example, if I have to receive 1 lakh from Saminathan and I have to pay 80,000 to him, so net he is giving me 20,000 rupees. But there are two separate transactions. One is selling of goods, second is receiving of services. So Saminathan is my trade creditor and trade receivable. Saminathan is my debtor as well as creditor. Friends, tell me whether I need to present this debtor and creditor both in the balance sheet on a gross basis, or I should offset it, I should net it and show the net balance receivable or payable. What is your view? I have to offset it. I have to show it net because this is a single party where the right to offset is also there. We are saying that we have to net and then we have to present this, right? We are already saying this, that we have to present it net. Okay, we have to settle it net. But second example, all the goods which I'm selling to Saminathan, right? That is backed by the bank guarantee. That is a secured transaction. That is backed by the bank guarantee. Okay. That is backed by the bank guarantee. But whatever services I am taking from Saminathan, that is not backed by any guarantee. Okay. So it means the goods which I am selling is secured, right? But the services which I am receiving is unsecured. The services which I am receiving is unsecured. Now, can I net it off my asset and liability here? My receivable and payable, can I net it off? No. Why you are saying no? So Sweta is saying no. But any student who can try and attempt this question? Students, you are CA final student. These kind of question may come into the exam. Okay, just to test your knowledge and understanding. See, the receivable is in the nature of secured receivable. The payable is in the nature of, unsecured payable. Tomorrow, if Saminathan will not pay me the money for my receivable, what I can do? I can revoke his bank guarantee. But if I'll not pay him, he can't do anything, right? So going by the nature, so it is one is unsecured, another one is secured. So this cannot be offsetted, right? This cannot be offsetted and it has to be provided gross. Third example, deferred tax asset and deferred tax liability. You understood deferred tax asset and deferred tax liability? You must have seen that in your financial statement also while auditing. Yeah. And if you are attending this virtual revisionary classes, probably you have already covered Ind AS 12, which talks about your deferred tax concept. So friends, on few items, there are deferred tax asset. On few items, there are deferred tax liability. On few items, there are deferred tax asset. On few items, there are deferred tax liability. So net, whether it is a deferred tax asset or deferred tax liability, this DT and DTL needs to be offsetted and it has to be shown as net. Okay. Likewise, provision for current tax and advance tax and TDS which was paid. For example, when you are assessing your full year provision, you found that my total tax liability is 1 lakh rupees. Okay. And you have already paid a TDS or advance tax of, let's say, 60,000 rupees. So what you will do? What is your net obligation towards income tax department? What will be your self-assessment tax? What will be your self-assessment tax? 40,000, right? You cannot say that 1 lakh rupee is payable, 1 lakh rupee is my liability, and 60,000 rupees my asset. You cannot say that. Your net 40,000 rupees is your liability. So provision for income tax has to be offsetted, or advance tax and TDS has to be offsetted with provision for income tax. And net you have to see, you have to reflect in your balance sheet as a net, balance sheet, P&L, wherever net receivable or payable. Okay, net number. So this income and expenses, your balance sheet asset and liability can be offsetted if it is permissible by Ind AS. Frequency of reporting. Ind AS 1 says that the financial statement has to be, presented, has to be prepared at least once in a year, at least for a year, right? So there has to be a set frequency of yearly frequency. It has to be for a year. Okay. Comparative information. So at least 1 year comparative has to be given. Okay. So can the company provides the additional comparative also? At least 1 year comparative has to be given. Can the company provides a third comparative also? Third year comparative. In case of correction of error, in case of change in accounting policy, third balance sheet is required. But third P&L, third statement of changes in equity, third cash flow statement is not required. 3 column. But so can the company provide additional comparative information? The company provided, yes, the company can provide additional comparative information if it is required by Ind AS. Okay, if it is required by Ind AS and in compliance with Ind AS. Okay. Consistency of presentation, the accounting policy consistency, presentation consistency, that needs to be maintained throughout. That needs to be maintained throughout. Okay. Is that clear? Is that clear, my dear friends? So this was the, broad pointers. These were the general features and overall consideration for the presentation of financial statement. Okay. So this is the detail which was given. Okay. Which I have already explained. Talking about the structure and content, this standard is such a meticulous standard. It says that, in your financial statement. So in an annual report, there are a lot of document in an annual report, like corporate governance report, MD&A report, director's report, BRSR report, correct? Lot of reports are there. So standard says that in a series of documents, this financial statement has to be clearly called out. Financial statement has to be clearly identified. Okay. So reporting period, it says that at least annually, if the reporting period is longer or shorter, when your reporting period can be longer or shorter? Can you please tell me when your reporting period would be longer or shorter? If it is a newly incorporated company, for example, the company was incorporated on 1st October 2024. You are presenting 6 months financial statement only for the first year, right? Or when your reporting period could be longer. For example, the company was incorporated in January. So you are allowed to present the 15-month financial statement. I mean to say, let's say January 25 to March 26. Okay, you are allowed. So in that case, the financial statement period will be longer than 12 months. So why it is longer or shorter, you have to define. Information required. Name and change of the name. So the name of the company is required on the financial statement. For example, Reliance Industries Limited, Adani Enterprises Limited, TCS Limited, Tata Steel Limited, Tata Motors Limited. And if there is a change in the name, it is also required to be presented in the financial statement. For example, if you see the annual report of Indus Towers Limited, they write Indus Towers Limited, formerly known as Bharti Infratel Limited. Okay. So this is what they are writing. Individual or group financials, whether it is a standalone financial statement or it is a consolidated financial statement, this is also required to be disclosed. Period covered, whether this financial statement is for the year, for the quarter, for the half year, it is also required to be disclosed. Currency, the currency has to be INR, US dollar. So what is the currency? It is also required to be disclosed. Level of rounding off. Okay. So whether the financial statement has been rounded off in million, in crores, in lakhs, it is also required to be disclosed. Okay. So friends, this was on the structure and content. So now I will going to discuss the structure of one by one balance sheet, profit and loss, statement of changes in equity, and notes to accounts. So before that, let's discuss one of the question from again. Just wait for a moment. Just wait for a minute. I'm just opening that file. Yes. I hope this question number 5 is visible to everyone. Is it visible to everyone? Question number 5. Is it visible to everyone, friends? Yes. So let's discuss this question. Okay. So let's discuss this question. Yeah. XYZ Limited, the company, is into the manufacturing of tractor parts and mainly supplying components to the original equipment manufacturers. The company does not have any subsidiary, joint venture, or associate company. During the preparation of financial statement for the year ended 31st March 2001, 20x1, the accounts department is not sure about the treatment or presentation of below mentioned matters. Accounts department approached you to advise on the following matters, right? So this company is into the manufacturing. The company does not have any subsidiary, joint venture, associate. During the preparation of the financial statement, the accounts department is not sure about some treatment and they need your advice considering you are the expert on Ind AS. There are qualifications in the audit report for the company with reference to 2 Ind AS. Means in the audit report, they have told that this company has not been complied with the compliance of Ind AS, 2 Ind AS, right? There are qualifications in the audit report of the company with reference to 2 Ind AS. So what is the accounting guidance? What Ind AS 1 says that? मैंने कुछ बताया था आपको Ind AS 1 में कोई compliance की requirement है? You remember I told you para number 16 of Ind AS 1, which says that the entity has to give a statement of compliance. The entity has to give a statement of compliance which says that, you know, the unreserved, right, explicit and unreserved statement of compliance. So management has to give explicit, means clear cut, and unreserved without any qualification. So management has to describe that whether the financial statement are in compliance with all applicable Ind AS or not. If the financial statements are not in compliance with all applicable Ind AS, it means the financial statements are not in compliance with Ind AS. These are not Ind AS financial statements, and hence it is not reflecting true and fair view. So in this case, the entity whose financial statement comply with Ind AS has to make an explicit and unreserved statement of compliance in the notes to accounts. An entity shall not describe the financial statement as Ind AS compliant until and unless it meet the requirement of all applicable Ind AS. It meet the requirement of all applicable Ind AS, right? Question number 2. Is it mandatory to add the word standalone before each of the component of the financial statement? Whether it is mandatory to write standalone balance sheet, standalone statement of profit and loss, standalone statement of changes in equity, standalone statement of cash flows, standalone notes to accounts, is it mandatory? This company does not have any subsidiary, joint venture, and associate. Answer is no. It is not mandatory, but yes, this fact has to be written in the notes to accounts, disclosed in the notes to accounts, that these are the standalone financial statement. Okay. These are the standalone financial statement. Is that clear? Third question. The company is Indian company and preparing and presenting the financial statement in INR. So basically it is INR. The company is an Indian company and the company is preparing and presenting the financial statement in INR. Okay. Is it necessary to write in the financial statement that the financial statement have been presented in INR? Yes or no? Whether the currency needs to be disclosed?
Yes.
Yes or no? Yeah, I told you, no, in the structure and content, the rounding of the currency, whether it is individual or consolidated financial statement, the name and change of the company, all these things are required to be disclosed. Yes, it is mandatory to disclose the currency in which the financial statement are presented. It is mandatory to disclose. Okay. The company had sales transaction with 10 related parties. The company had sales transaction with 10 related parties during the previous year. However, during the current year, there are no transactions with 4 related parties out of aforesaid 10 related parties. So in the last year, in the comparative year, there was a transaction with 10 related parties. In the current year, out of 10, there is a transaction with only 6 related parties. With the 4 related parties, there is no transaction in the current year. Hence, company is of the view that it need not disclose the sale transaction with those 4 parties in the related party disclosure, because with these parties, there are no transactions during the current year. Whether the company's view is correct? Tell me. Ind AS 1 says that you have to provide at least 1 year comparative. You have to provide the comparative information throughout the financial statement. So tell me whether company's view is correct or not. So whether the related party disclosure for all 10 entities are required, which was there in the current year and which is, which was there in the comparative year, right? And of course, the current year number has to be given. And for those 4 related parties, the current year number has to be given as 0000, nil, 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 right? Yes or no? So the entity has to provide all the comparative information, okay, for the last year, so that the financial state, the comparison can be drawn. Otherwise, if the company will not give this related party disclosure for these 4 related parties, how the comparison will be drawn? How the user will be able to understand that these are the 4 related parties with whom the transaction was there in the last year, but the transaction is not there in this current year? Yes or no? They will not be able to know. Okay. And hence it is important to give all the comparative information. Doesn't matter whether the transaction is there or not there in the current year. Okay. So what is written in this Board of Studies answer? For the first question, it is written, yes, an entity whose financial statement comply with Ind AS shall make an explicit and unreserved statement of such compliance in the notes to accounts. An entity shall not describe financial statement as complying with Ind AS until and unless they comply with all the requirement of Ind AS. Okay. Second, whether it is a standalone financial statement or consolidated financial statement. So whether it is a standalone financial statement, for consolidated, it is required to be written that it is consolidated. In this case, since the company does not have subsidiary, joint venture, and associate, so the word standalone is not required to be prefixed in every statement. Rather, in the notes to account, it is required to be disclosed that these are the individual financial statement. These are the standalone financial statement. Question number 3. Question number 3, which says that, the presentation currency, the currency is required to be presented as per Ind AS 1 and Ind AS 21. Question number 4, which says that as per para number 38 of Ind AS 1, which is not required to be quoted in your exam, except when Ind AS permit or require otherwise, an entity shall present the comparative information in respect of the comparative period for all amounts reported in the current period financial statement. An entity shall include comparative information for narrative and descriptive information if it is relevant to understanding the current period's financial statement. It is required to be disclosed. Okay. So this is the question which we have covered. Now let's come back to the PowerPoint presentation again. So just a minute. Yes. So friends, on balance sheet, we discussed current and non-current distinction. Okay. And this para number 54 of Ind AS 1. In Ind AS 1, it also talks about what should be the minimum line item on the face of the balance sheet, right? It provides a guidance that what should be the element, what should be the line items on the face of the balance sheet. In addition to division 2 to schedule 3, Ind AS 1 is also required to be referred for the purpose of this balance sheet classification, for the purpose of this balance sheet line item. Okay. Yes. Tell me the answer of this question. As per Ind AS 1, which one of the following item is not required to be shown on the face of the balance sheet? Biological asset, property, plant and equipment, investment property, contingent liability, intangible assets.
Contingent liability.
Of course, contingent liability is a off balance sheet item. Contingent liability is a off balance sheet item, right? It is not a balance sheet item. It is a off balance sheet item. Contingent liability. Okay. Yes. Second, current asset, non-current asset, current liability, non-current liability, we have discussed at length with 3 questions from ICAI studies material. Okay. Inventory or trade receivables, Pluto Limited are normally realized in 15 months. Should Pluto Limited classify such inventory or trade receivable as current?
Current, yes.
But it is more than 12 months. But it is realized in more than 12 months.
No, but it is a normal operating cycle.
It is a normal operating cycle. Yes. Yes, it is a normal operating cycle. Yes. Friends, there is one carve out which is given, and let me talk about that carve out for the current and non-current liability. You know, I have taken one question on where there was a default in the loan covenant, right? So for example, in the same question, for example, the company has taken a loan from a bank on 1st January 2025. Please write down. The company has taken a loan from bank on 1st January 2025 for rupees 1 crore. And the loan is repayable after 5 years, which is on 1st January 2020, 1st January 2030. The first payment has to be made on 1st January 2030 after 5 years, right? So on 31st March 2025, when the company was finalizing the balance sheet, there was a breach of some loan condition. There was a breach of some loan condition. Okay. There was a breach of some loan condition. Due to the breach, the loan becomes repayable on demand on 31st March 2025. So what is the nature of this loan now on 31st March 2025?
Current asset.
Current.
Current liability.
Current liability. Because, you know, initially it was long term, it was non-current, but on 31st March 2025, there was some breach and this loan become repayable on demand, and hence it will be classified as current liability. Now this company financial statement are going to be approved in the board meeting. These financial statement will be adopted in the board meeting. Okay. So before approval of the financial statement, before adoption of the financial statement, the management spoke to the bank. Management ने बैंक से बात की. And now bank has agreed to waive the violation. Bank is okay that I will not demand any payment in the next 5 years. I am okay. So bank has written and bank has confirmed that I will go by the old terms. Okay. So the company was talking to the bank, and before approval of the financial statement, event occurring after balance sheet date, subsequent events. So after reporting date, but before approval of the financial statement, bank has agreed to waive the violation. So now the question is whether this loan liability on 31st March 2025 has to be classified as current or has to be classified as non-current.
Non-current.
What is others' answer? Can you please write on the chat box? What is the answer of others? Friends, standard says that if there is a default on the balance sheet date, right? On the balance sheet date, I mean to say before balance sheet date or on the balance sheet date, then it has to be classified as a current liability. If the money is repayable on demand, I mean to say if the liability is to pay within 12 months, okay? It has to be shown as current liability. But subsequently, before approval of the financial statement, if this default is corrected, if this default is fixed and bank is not going to ask for the payment for at least 12 months before, for at least 12 months within the, for at least within 12 months from the reporting date, right? Then it will be classified as an adjusting event, and hence the liability has to be classified as a non-current liability. It has to be classified as a, it has to be retained as a non-current liability. In this case, since before approval of the financial statement, bank has agreed that the bank is not going to demand payment for at least 5 years. Means bank will go by the old terms, right? And hence in this case, this liability will continue as a non-current liability, not the current liability. And Saminathan, don't you think that you will show this liability as a current liability in this year and non-current liability in the next year? However, when you are signing your balance sheet on the reporting on the board meeting date, so this liability has already been a non-current liability. So this is one of the clarification which is given in the standard, which says that if due to a breach of the loan condition, if the loan become repayable on demand and before approval of the financial statement, if that breach is corrected, and by correction of the breach, the company is not obligated to pay within 12 months from the end of the reporting date, then that liability has to be reclassified as a non-current liability. Is that clear or clear? Is that clear in mind or clear from mind, guys?
Clear, sir.
Clear? Okay, very good. So we talked about this balance sheet concept. We talked about the current, non-current. Okay. So we talked about this example also. Statement of profit and loss, as I told, it includes your profit after tax. I mean to say revenue, expenses, total income, expenses, profit before tax, tax expense, profit after tax, and other comprehensive income, and total comprehensive income, right? Friends, there is no concept of prior period item in Ind AS. Why? Because whenever there is a prior period error, then your comparative number has to be restated, third balance sheet needs to be presented, and reconciliation and disclosure has to be provided as per Ind AS 8. Okay. So friends, your expenses has to be provided only on the nature basis, so it is not relevant for you guys. So there is the minimum line item on the face of the profit and loss, which is given like revenue, finance cost, impairment losses. So while your division 2 to schedule 3 provides the format of the P&L, but in Ind AS 1 also, they have provided the minimum line item which has to be there on the face of the profit and loss, right? Friends, in accounting standard, there were two words, extraordinary item and exceptional item. But in Ind AS, there is no concept of extraordinary item. There is only a concept of exceptional item which exists. Okay. So what is the meaning of extraordinary item? Extraordinary item are those items which are not arising in the ordinary course of an entity. For example, loss due to earthquake. Whether earthquake is an ordinary activity. Whether earthquake is an ordinary activity, answer is no. So if a loss which is arising due to earthquake, it was considered as an extraordinary item in accounting standard, in your CA Inter. But in Ind AS and IFRS, so Ind AS came from IFRS, and IFRS says that if you are running a business, nothing is called as ordinary or extraordinary, right? There could be a loss due to natural calamities. There could be a risk. Okay. So it says that there is nothing called as an extraordinary. At the max, it could be exceptional, right? For example, if there is a loss due to earthquake, so there is a huge loss which was there, it can be shown as an exceptional item so that user will be able to understand that this impact was due to this year natural calamities only, right? So in Ind AS, the concept of exceptional item exists, but the concept of extraordinary item, prior period item does not exist anymore. Okay. Yes. So in balance sheet, as I told you, there are minimum line item which is given. So your company has no investment property. Would you present the line item as investment property nil?
No.
So when we talk about the minimum line item, it means if that amount is there on those line item, either in current year or in the comparative year, then it is required to be presented on the face, otherwise not. Face of balance sheet, P&L, whatever. Your company has a revenue of 100 crores, net profit of 15 crores, and finance cost of 1,45,000. Would you present the finance cost as a separate line item or merge it with other cost? Ind AS 1 says that finance cost has to be a minimum line item on the face of the P&L. The revenue is 100 crores, but the finance cost is only 1,45,000. And for example, this company is rounding of the numbers in crores. So would you write 0.145 or 0.15 on the face of the P&L? Amount is there, although amount is small, but amount is there. क्या आप फाइनेंस कॉस्ट की लाइन आइटम को P&L में दिखाएंगे? Yes, it is a requirement of Ind AS 1 that the finance cost has to be shown as a separate line item. I shown you, na? The finance cost, it has to be shown as a separate line item. So if the amount is there either in current year or comparative year, you have to show this line item as a separate line item. Okay. Would your answer be different if the finance costs are appearing for the first time? For example, in the last year, there was zero finance cost. In the current year, there is a finance cost. Answer is no. There is no change. Still, you have to present this finance cost as a separate line item on the face of the P&L. In the last year, the number is zero. In the current year, of course, the number would be 1,45,000. Correct? Then the line item on other comprehensive incomes are given, which you need to learn that what are these line items. Okay. So I have just showing you these line items. Okay. There are 9-10 line item which you need to remember. Statement of changes in equity. What is a statement of changes in equity? It is a movement in the shareholder funds. Okay. Changes in equity share capital, changes in reserves and surplus. You have to just give a walk, reconciliation, movement from opening to closing, right? Standard says that if there is a correction of error or if there is a change in accounting policy, so you have to give a separate line item on the statement of changes in equity that what is the impact due to a change in accounting policy or due to correction of error in the retained earnings or in the other reserves. Okay. So this is required to be given. Right. So for the cash flow statement, this standard says that for cash flow statement, you need to refer Ind AS 7. Okay. This standard has not given any guidance on the cash flow statement. For notes to account, this standard says that you have to present information about the basis of preparation of the financial statement and the accounting policies. You have to capture in the notes to accounts. You have to disclose the information required by Ind AS, which is not presented elsewhere in the financial statement. Can you tell me what is the meaning of this box? You have to disclose the information which is required by Ind AS, which is not presented elsewhere in the financial statement. Can you tell me any example in the notes to accounts? What are the information which is required by some specific Ind AS, which is not covered in balance sheet, P&L, statement of changes in equity, statement of cash flows?
Contingent liability.
Contingent liability, very good. This requirement is as per Ind AS 37, capital commitment, contingent liability, related party disclosure. This requirement is as per Ind AS 24. Segment reporting. This requirement is as per Ind AS 108. Actuarial disclosure, actuarial valuation disclosure. This requirement is as per Ind AS 19. Okay. Then provide information which is not presented elsewhere in the financial statement, but it is relevant for the understanding of any of them. For example, the company has a property, plant and equipment of 1 lakh crore. You are looking at the balance sheet of the company and you are very happy. You are just thinking that I should invest in that company. Okay. Why? Because you have seen that the company has a long-term asset. The company has a property, plant and equipment of 1 lakh crore. Friends, this company has taken a bank loan by pledging their all fixed assets, all their building, land, etc., etc. Okay. In the balance sheet, what you will see in the balance sheet, you will see only one line item, property, plant and equipment, 1 lakh crore. That's all in the balance sheet. Yeah. And there is a note reference in the balance sheet. Okay. So don't you think this information is important for the user of the financial statement to know that yes, this company has pledged all its property, plant and equipment, all its land and building for the purpose of taking a loan from the bank? Don't you think this information is important? And this information needs to be disclosed in the notes to the financial statement? Yes or no?
Yes.
Why? Because it will impact the decision-making capacity of the user of the financial statement, right? So whenever you will read this comment, oh, this company has pledged its entire land and building, all immovable, movable properties, your decision will change. And hence, standard says that, Ind AS 1 says that your notes to accounts shall provide the information which is not presented elsewhere. I mean to say balance sheet, P&L, cash flow, statement of changes in equity. And it is important for the user to understand them, right? So this is what it is written in the Ind AS 1 for the notes to. It also says that you have to maintain a sequence for the notes to accounts. For example, it says that you have to give a statement of compliance with Ind AS. Which statement of compliance? Explicit and unreserved statement of compliance to say that the financial statement are reflecting true and fair view. Okay. Summary of material accounting policies. The accounting policy you have to provide in the notes to accounts. Supporting information for item presented in financial statement in the order in which each statement and each line item is presented. What is the meaning of this? What is the meaning of this? All the schedules. Notes to accounts, all the schedules. You must have seen in the balance sheet note referencing. 1, 2, 3, 4, 5, 6, P&L note referencing. So all this breakup of the balance sheet item, P&L items, all these details has to be provided in the notes to accounts, which is the supporting information on the balance sheet, P&L, etc., etc. Because in the balance sheet, you will find property, plant and equipment. But in the notes to accounts, you will find the gross block, accumulated depreciation, net block, the class of asset, land, building, furniture and fixture, office equipment, aircraft, okay? So machinery. So all this class of asset you will find in the notes to account. Other disclosure, which is including contingent liability, unrecognized contractual commitment and other non-financial disclosure. Okay. So other disclosure means segment reporting, related party disclosure, capital commitment, contingent liability, actuarial disclosure, etc., etc. Fair value disclosures, which is required as per the relevant Ind AS. Okay. Friends, the standard also says that in addition to accounting policy, critical management judgments are also required to be given, right? Normally in accounting, normally in notes to accounts, you are only covering accounting policies. But in Ind AS 1, it says that you have to provide critical management judgments. Your balance sheet is not always an accurate balance sheet. In the balance sheet, there are some line item which is prepared on the basis of best estimate. Can you tell me the property, plant and equipment, the number of property, plant and equipment in the balance sheet, whether it will always be an accurate number or it is a best estimate? Just think like a chartered accountant and then answer my question. Your property, plant and equipment number consists of gross block, depreciation, net block, right? So gross block, what is a gross block? That is a cost which you have paid to acquire property, plant and equipment. Whether this cost is an accurate number or not. At least I'm expecting yes or no.
Yes.
If you don't want to speak, you can write on the chat box also. The gross block is an accurate number, which is the actual amount you are spending. For example, you bought a car and you bought a car for rupees 10 lakh. So gross block is 10 lakh. It is accurate number. less accumulated depreciation. Whether depreciation is also a accurate number or it's a best estimate.
Best estimate.
Depreciation is a best estimate. Why? Because depreciation you are charging on the basis of useful life, and useful life is an estimated life, right? For example, all these telecom tower companies are depreciating their tower considering a life of 20 years. But whether this tower will fall on the earth after 20 year, answer is no. They have the tower which are running for last 30-40 years also with small repairs, right? So this is a best estimate. This depreciation is a best estimate. So what is your net block? Your net block consists of gross block minus accumulated depreciation. So your net block, the number which is there in the balance sheet, is it a best estimate number or is it an accurate number? It is a best estimate.
Best estimate.
Right? So friends, Ind AS 1 says that in addition to accounting policy, in wherever area the best estimates are there, you have to define, you have to provide, not define, you have to provide the critical management judgment and estimate in the notes to accounts. Like your provision for employee benefits, gratuity, leave encashment. You are using a lot of estimates. So these are required to be disclosed. Your contingent liability, you are using a lot of estimate. You are required to disclose those estimates. Okay. So critical management judgment and estimates are required to be disclosed in the notes to accounts. Okay. In the notes to accounts, right? Capital management policies. This is one of the new disclosure. And friends, it says that how the company is managing its capital. Because for the growth of any business, growth of any organization, the capital is required. Okay. So like if you see the annual report of ITC Limited, ITC Hotels or ITC Limited, they are writing that they are managing their capital by deploying the internal accruals, what they are generating a profit, what they are making a money. They are deploying in their business to expand their business, right? To expand their business. Okay. So this is the capital management policies. Okay. So this is also required to be disclosed. How the company is managing capital, how the company is increasing the wealth of the shareholder. For example, what dividend the company is paying, what is the capital base which is moving from the opening balance. If the company is raising any further right issue, if the company is buying back the shares. So all these information needs to be disclosed as a part of the capital management policies. Okay. So these are the disclosure which is required. And friends, the Indian presentation of the financial statement is given under the division 2 to schedule 3, which is notified on 6 April 2016. So schedule 3 was there. Ind AS 1 is also prescribing some guidance on the presentation of financial statement. Okay. So comparison between Ind AS and accounting standard. Ind AS 1 is a very detailed standard which covers presentation of financial statement. Accounting standard 1 was a small standard which was only taking care of disclosure of accounting policy. A statement of changes in equity, it is a separate statement under Ind AS, while in accounting standard, we were also presenting this movement in equity share capital, movement in reserves and surplus as a part of the notes to accounts, but it was not a separate statement which is signed by the auditor and the board of director. Other comprehensive income, it is a separate requirement in Ind AS. This requirement does not exist in Ind AS. Extraordinary item, this is not required in Ind AS. This was a separate requirement in accounting standard. Explicit and unreserved statement of compliance. It is a mandatory requirement in Ind AS. There was no such requirement in accounting standard. Key source of uncertainty, judgment and estimate. This is required in Ind AS, but such disclosure was not required in accounting standard, right? Okay. So the judgment, estimate, uncertainty, okay, this is required in Ind AS. It is not required in IGAP. Third balance sheet requirement. So whenever there is a change in accounting policy, correction of error, the opening balance of the comparative year balance sheet needs to be presented, right? So in accounting standard, there was no such requirement. Whenever there is a correction of error or there is a change in accounting policy, the entire impact has to be taken in the current year. But in Ind AS, it has to be comparative needs to be restated and the third balance sheet needs to be presented. So friends, this was the difference between Ind AS and IGAP. So I have just revised this entire Ind AS 1. Now I am taking you back to some multiple choice question just to check your understanding. Please let me know if the Word file is visible. to all of you? Please let me know. Is it visible to everyone? Is it visible to everyone? Yes? Yeah. The objective of Ind AS 1, the objective of Ind AS 1 is to prescribe the basis for, the objective of Ind AS 1 is to prescribe the basis for what? Disclosure of accounting
Presentation.
policies, presentation and disclosure in general purpose financial statement, presentation of general purpose financial statement, disclosure in general purpose financial statement. What is the title of this standard? What is the title of this standard?
Presentation and disclosure in general purpose financial
What is the
statement.
title of this standard? Again, I'm repeating. What is the name of this Ind AS 1?
Presentation of financial statements.
Presentation of financial statement. Now tell me, what is the right answer of question number 1?
C.
C is the right answer. Yes. So this standard only gives you guidance on the presentation. It says that in notes to accounts, these Ind AS, other Ind AS requirement needs to be presented. Okay. So this standard only talks about presentation related requirements. So C is the right answer. Does complete set of financial statements. So what is the right answer? C is the right answer. Okay.
Yes.
Yes. Does complete set of financial statements for Ind AS 1 includes notes to accounts?
Yes.
Yes, it includes notes to accounts. Yes. Notes to accounts is the mandatory component of the financial statement. Ind AS 1 does not prescribe. What Ind AS 1 does not prescribe? You have given 4 options. Accounting
Policies.
Accounting.
guideline for balance sheet, guideline for statements and iniquity, guideline for statement for loss. Ind AS 1
The
does not
accounting
prescribe
policies.
the accounting policies. It does not prescribe the accounting policy. This is the right answer. Ind AS 8 provides. Okay. Question number 4. Which of the following is not specifically a required disclosure of Ind AS 1? Okay. Name of the reporting entity or other means of identification or
Name of
any change. Whether this is required, not required. Name of the reporting entity is not required as per Ind AS 1.
required.
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 Name of the major or significant shareholder of the entity required or not required?
Not required.
Required as per Schedule 3, not required as per Ind AS 1. Level of rounding. Whether rounding of levels is required, not required?
Required.
Required. Whether financial statement are individual or consolidated, required, not required?
Required.
Required. So what is the right answer? So this shareholder,
Name of
name of the major or significant shareholder of the entity, this is not a required disclosure. Okay. Question number 5. Which of the following report is not a component? Which of the following report is not a component of the
Director's report. Director's report.
balance sheet is a component, statement of security is a component? Yes. Director report is not a component. This is a component of the annual report, but not a component of the financial statement. Question number 6.
Explicit and unreserved.
An entity,
Unreserved.
you guys are very fast. An entity whose financial statement comply with Ind AS will make and day's statement of such compliance in the notes. Explicit and reserved, implicit and unreserved, explicit and unreserved, implicit and reserved. Yes. Explicit and unreserved statement of compliance. Okay. This is required as per Ind AS 1. This is required as per Ind AS 1. Okay. Is that clear?
Yes.
So friends, we have completed this Ind AS 1. I have covered the 5 critical questions from study material. I have covered few questions from my PowerPoint presentation, and I've also covered 6 multiple choice questions from this Word file. And we discussed the component of the financial statement. We discussed what is element of the financial statement. We discussed what are the general features of the financial statement. We discussed what is meant by current asset, what is meant by non-current asset, what is meant by current liability, what is meant by non-current liability. We understood the asset depends on the expectation when you are realizing the asset, right? But the liability is depending on your contractual rights. Then we discussed what are the general features which are required in terms of the structure and content, like name of the company, rounding of levels, currency, okay? So all these aspects we have discussed. We discussed the structure and content of balance sheet, statement of profit and loss, like other comprehensive income, statement of changes in equity, notes to accounts, which includes your statement of compliance, which includes accounting policies, which includes the backups, the schedules into the notes to accounts for balance sheet, statement of profit and loss. And then if other Ind AS requires some specific disclosure like related party disclosure, segment reporting, capital commitment, contingent liability, post balance sheet date events, okay, actuarial disclosure. So these all are required to be part of the notes to accounts. Okay, so Ind AS 1 says this कि अगर कोई स्टैंडर्ड की कोई भी रिक्वायरमेंट है, that requirement needs to be followed. Okay, and with this 6 MCQs, and I'm glad to see that except the first MCQ, which is of course a confusing MCQ, but you have to be very clear that what is the title of the standard, right? And accordingly you answer. So we discussed the 6 MCQs, and I can say that everyone was right on all these MCQs. So great. So friends, now I am handing over this to Shilpa ma'am. Shilpa ma'am is part of Board of Studies, faculty. She is from Board of Studies. So she will provide you some guidelines relating to these all revisionary classes. Yeah, over to you, ma'am.
Thank you, sir. Thank you. And hello, students. Welcome for this session. And I hope you have taken maximum benefit from today's class. This is our first class for this financial reporting. In fact, for final level, we are starting for this September 2025. Revisionary classes, these live virtual revisionary classes are supposed to be taken by the students in the form of revision only. So students, when we say it is revision, it means that you have to come. We assume that you have already studied your study material, you have started your preparation, and in fact, you have completed your first or even 2 rounds of your preparation. By saying 2 rounds of preparation, I mean that because Indians are very technical in nature. So definitely in 1 round of study, you cannot grasp the entire Indians or all the concepts which are there in Indians. So to understand them properly or to just have a good hold on Indians, it is very necessary that you have to do 2 rounds of study for this Indians. So we believe that you have done that, and now you're in the 3rd round, which is the revision phase. So for revision phase, we have already uploaded the questions which sir has taken us to today. So those questions are there on the assignment notes for this batch, revisionary class batch. And we expect you that you should first go through those questions. And in case you have any doubt, then we come ready with those doubts so that when in the class, you can get those doubts resolved live. Okay. So whatever counter questions you are having, you can ask sir, and sir will be there to reply you. Okay, one thing. And another thing, sir, that MCQs, they test your conceptual understanding. So it is very necessary that your base should be very clear, because sometimes at final level it happens that questions are framed from theory, but they are application based questions. And for application based questions or practical questions, if your base is not clear, your concepts are not clear, you'll get confused somewhere. आप ना कहीं पे डगमगा जाएंगे, तो वो आपकी सिचुएशन ना बने, इसलिए जरूरी है कि कंसेप्चुअल क्लैरिटी हो। और ये एमसीक्यूज आपको कंसेप्चुअल क्लैरिटी देते हैं, तो इनको समझने के लिए और इनको आंसर करने के लिए बहुत जरूरी है कि आप एंटायर लेक्चर को ध्यान से सुने, क्योंकि कहीं ना कहीं अगर सर आपसे ये एमसीक्यू पूछ रहे हैं, इसका मतलब है वो कंसेप्ट भी कहीं ना कहीं उन्होंने कवर किए हैं क्लास में ना। यह है कि आपको ध्यान देना है, ठीक। और बेटा, आपके फीडबैक्स हमें हेल्प करेंगे इम्प्रूव करने के लिए। तो 2-3 चीजें मैं आपको एक बार चाहती हूँ। एक तो फीडबैक फॉर्म, जब आप बीओएस के नॉलेज पोर्टल में लॉगिन करते हैं, लॉगिन मीन्स जब आप अपना रजिस्ट्रेशन नंबर के साथ लॉगिन करते हैं, वहां पे आपको सबसे पहला टैब मिलेगा फीडबैक का। दैट इज वेरी नेसेसरी कि आप फीडबैक भरिए, और हर क्लास का भरिए। इट विल हार्डली टेक अ मिनट फॉर यू। उसमें ज्यादा इंफॉर्मेशन हम नहीं मांग रहे हैं कि आपको बहुत टाइम लगेगा। आप उसे एक बार भरिए, उससे हमें इंप्रूव करने में, सर को भी पता चलेगा कि आप क्या चाहते हैं, अकॉर्डिंगली वो इनकॉर्पोरेट करेंगे अपने नेक्स्ट सेशंस में। ओके ओके, प्लीज स्पीक इन इंग्लिश, आई डोंट माइंड Saminath. Okay, so what we are saying is that in case you want something more from us, you want us to deliver something, you want, what is your expectation, we can know only through those feedback forms. So it is very necessary for all of you to fill that those feedback forms for every lecture. For every lecture, just mention the date and fill the feedback form. We'll come to know what were the shortcomings or what is your requirement which we need to incorporate it further. Okay, So that is very necessary, one thing. Second, what we said, that it is very necessary that you come prepared. We are assuming that you have gone for 2 rounds of study and this is revisionary classes. So you are taking it as a revisionary class only. So whatever the questions sir has taken today, that has already been uploaded, and even for upcoming classes also, we'll be uploading the questions which will be taken up during the session. So go through those questions, and in case you have any doubt in those questions, be ready with your doubts and ask them during the class so that sir resolve it. Okay. So any counter questions which you are having during your resolving of doubts, that also will be answered by sir. Second thing is that students, feedback form, besides feedback form, we have also created a WhatsApp group for students for final level. So a link for this has been given twice during the session. We are again giving the link to you. Please join those WhatsApp group, whatever you are having opinions, or you'll be connecting with other students also. That will help you, that will give you a platform where you can interact with students also, those who are going through the sessions. You'll be updated with the current session, what is the next session, which session is going to come. In case you have any dissatisfaction, in case you have any queries, that may be resolved by students also. You put your queries there on the WhatsApp group, maybe some students reply, or that will be taken up in the next class. We'll reach it to students, we'll pass it on to sirs, and whatever the faculty who is taking the next class, that can be taken care of. So join those WhatsApp group link. Okay, I'm sending the link again, and you all are required to join this WhatsApp group. This is for your benefit. Okay, and please do fill the feedback form. That is very, very necessary that those feedback forms are filled. Any kind of whatever you're looking for, any feedback that you find that your queries are not resolved, your feedback, you are finding it, you want more questions to be taken, you want more concept to be taken, to be explained during the class, whatever your requirement is, you can put it there on the WhatsApp group as well. Okay, and please take it as revisionary classes. Come well prepared for the session, and in case some sir provides some questions for homework, do that so that you can take maximum benefit of the session. Okay, any query?
Sorry, ma'am.
Yes beta.
मैम मैं ये अभी तक रिविजन का असाइनमेंट डाउनलोड नहीं की हूँ, अपलोड नहीं हुआ ना?
नहीं, कल किया था इंडिया 16 का। अगर नहीं हुआ होगा तो विल पुट इट, हम कर देंगे, और विल डू इट फॉर नेक्स्ट क्लास ऑल्सो, फॉर एटलीस्ट फॉर अपकमिंग 2 to 3 क्लासेस हम आपको क्वेश्चंस अपलोड कर देंगे। ओके, और जो सर ने अगर आज आपको कुछ पीपीटी या कुछ लिया है तो विल आस्क सर आल्सो टू शेयर दैट, so that will also be get uploaded. Okay, questions will be uploading in that one. Whatever questions sir is going to take, we'll try to upload it in. Okay, any query which you have, general queries regarding your expectations for these sessions, how you want it to be taken up in future, whatever your expectations are, you can please share us along with the feedback form. Through feedback form you can share with us, through the WhatsApp group you can share with us, and also here in this platform also you can tell to me, we'll take care of. Any queries, students? Okay, Shweta and who's Deorat, are you happy with the class? You have,
Yes, ma'am.
okay. Okay. And what about the WhatsApp group? I hope you have joined the WhatsApp group.
Yes, ma'am.
Yes, ma'am.
So, Samnathan, very good that you are happy with the class. We want that feedback to come in that feedback form also. Do fill the form, that encourages the faculty also, and that motivates us all to bring something new for you. Na? Whatever your expectations, we are there to cater it. But until and unless you share with us what is your expectation, it will be difficult for us to assume everything and do it. Na? So we request you that please share those feedback form, fill those feedback form session wise. Okay. So for every faculty, we require your understanding of the knowledge concept, how much practice it is giving you. You feel that it is very exam oriented, well and good. In case you feel more questions to be taken up, you'd let us know. We'll try to do, or we'll try to add more sessions to these revisionary classes. Okay. Any other point which you need to take care or you want to share with us, students? So we can sum up the class then.
Yes, madam. We can
Oh.
conclude.
Okay. Thank you. Thank you,
Okay,
students,
thank you
and
so
thank you,
much.
sir.
Thank you.
Thank you. Bye, sir.
Bye, madam.
Bye, students. Bye. Hanji.